All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES broke out to another new all-time high, but then it also pulled back and made a new overnight low. So that tells us that right now we're heading into a market with a slightly mixed context, where the bigger picture remains quite bullish, but short term, with the econ reports out later this morning, and the big headline being Apple earnings after the close, we could see a lack of directional conviction. So that means that, regardless of which way we go, to the upside or downside, it might be more of a rotational type market where we're not really seeing sustained upside or sustained downside. Right now, heading into the open, we are opening on a slight weak note, because we've reversed the entire upside move from the overnight session. To keep things simple, I think it's best that we just use 49 to 51 as the bull bear zone heading into the open. This is a very short-term gauge of market strength and weakness, and as long as we can hold above that, it would tell us that the buy side is still in control, and we can get pushes up to the 54 gap, and then the 55 half to 57 pre-market resistance. Perhaps get a rotation off that, and then head up to the 59 half to 61 half initial resistance zone. Now, in the event of a break below 49 to 51, we have to keep in mind that the bigger picture bias remains bullish, right? So this is a short-term gauge, and a break below it could take us down to the naked VPOC at 45 half, and initial support 43 to 45. But just because we're trading below the bull bear zone doesn't mean that we're not going to consider long setups today, because the bigger picture bias is still bullish. And at the same time, if you break below 49 to 51, it's very possible that you might just rotate around that zone. So it doesn't mean that you break and then you just sell off and you hold below that zone. One other scenario that could happen, which is very likely given the mixed context, is that even if we break 49 to 51, we can get buyers at the next zone, or maybe even ahead of it, perhaps at Friday's low, and then rotate back up through 49 to 51 and go up to 55 half to 57. So instead of, viewing the bull bear zone as something where if we break it, we just short the first pop back up into it, keep in mind that we could rotate around that zone today. It's a bit different, and it's not necessarily an area where if it breaks, we're just going to liquidate down and it's going to be a hard sell-off, right? That's not really the case. The expectation today is more of a balance type session without directional conviction, which means low odds of trend. So even if we break, we can go up and test 55 half to 57 and rotate around 49 to 51. But one thing that a break of 49 to 51 would tell us is that we can now short any moves up into the resistance zones, right? A break of 49 to 51 would tell us that the market is not as strong, and even if we start trading back above it, it doesn't mean that it's going to be a very strong market, and it would actually improve the odds of a balanced type session, which means we can consider shorts at 55 half to 57 and 59 half to 61 half if the market first breaks 49 to 51. So it's a little bit of a more complex or mixed context today, but I think if we just focus on the bigger picture, if you want to focus on the simpler trade setups, then focus on conservative shorts above 49 to 51, long setups above 49 to 51, and then if we break, we can consider long setups at 43 to 45. That's a pretty safe spot to get a rotational move at the very minimum, and 40 to 40.75 is the recent low from a few days ago, and then 36 to 38 is a very decent support zone, and personally I'm not even expecting ES to head all the way down to 36 to 38, but in the event that it does, that zone is a place where in most scenarios it's an automatic long setup. So the only time we won't consider taking that long is if ES balances for a few hours 3 or 4 points ahead of the zone. in that case, you know, if we break, we'll avoid the long setup. But in majority of scenarios, a push down to 36 to 38 is an automatic long. So that's the idea on the downside. You know, overall, I think it's going to be more of a mixed or a balanced type session. NQ failed to make a new high in the overnight session, and that's probably because of Apple earnings. You know, TF set a new all-time high, but then pulled back, pretty much the same as ES. So those two markets are looking, you know, kind of mixed at the moment. But you know, bigger picture, everything still looks bullish. So we don't want to go aggressive on the short side too soon, right? But the conservative shorts, you know, we can certainly consider. And I think at the very minimum, we'll see rotational type moves at 55 half to 57, 59 half to 61 half. So, you know, on the day time frame, we can still consider short setups there. It's just that, you know, those aren't setups where we're going to give it too much room because they are counter trend. And if they're going to work, we expect them to work quickly, or we're probably going to scratch and then look for the next setup. So, you know, the safer setups would be any pullbacks into support, long side, or shorting initial resistance, first test. So let's see how, you know, we open here. We have, I think, pending home sales out at 9 a.m. Central. And then, you know, I think the focus is just going to be on Apple earnings, resulting in some chop in NQ, which can, of course, lead to, you know, a choppy session ES as well. So we do want to be selective. We're not going to be, you know, looking for too many trade setups today. So those are the main ideas. Let's see how we open, and then we'll take it from there.